What's up, everybody? Welcome to today's episode of the Daily Dose. Today is Tuesday, September 20th. If you like this type of content, be sure to subscribe here on YouTube. I release one of these videos every day that the market is open. Just a quick little video, a little rundown of what happened during the day. And over the weekend, I release a longer video that kind of is more in-depth, has better commentary. If you haven't checked out this past weekend's video, be sure to do that. I was actually away for a few days, so it didn't come out until Monday, so I do apologize for that. But it's definitely a really good episode. There's a lot of great content in there, so be sure to check it out. And then be sure to just subscribe here on YouTube and follow us wherever you listen to podcasts as well. So let's get into it. So the Fed meeting is underway today, and the markets are down. Again, we're still not down back to the June lows, but we're getting closer now. The S&P 500 was down a little over 1% today. The NASDAQ was down just under 1%. The Dow was down about 1%, so everything was pretty down. The S&P is approaching minus 20 from the beginning of the year, minus 20% now. Once again, the NASDAQ's down about 27%. The Dow's down about 15.5%. And with this Fed meeting that we have going on right now, so it's expected at the end of the day tomorrow that they will raise interest rates by 75 basis points. So that's kind of what the market is pricing in right now. I do think that it's unlikely, but it's possible that they'll raise rates by 100 basis points. I think the markets would react negatively to that. It's going to be a volatile situation either way, but it is expected mainly by the market that they will raise rates for a third straight time by 75 basis points and continue this kind of unprecedented pace of raising the interest rates. So if we take a look at the S&P 500, we sold off. We were below this zone here that we had mapped out at about 3,900, 3,895. We bounced below. We came back up yesterday and touched the bottom of the zone, and we sold back off. So we're kind of like making our way back down. Wouldn't be surprised if we got a big sell-off back into this zone right here starting tomorrow, with interest rates going back up. But if we get below these June lows, I'm going to go ahead and draw that now, actually. So if we get below these June lows, what do I expect next? Well, I would expect this to be the next zone that we would get to. So let's draw out our rectangle. And for those of you listening on the podcast, I will be sure to have the actual levels. Let's bring that up. Okay. And now let's bring it across so that the bottom of this zone. So the zone, it starts at, I need to get my mouse free. Starts at 34.83 on the bottom side and ends around 35.50. So let's bring that across. Wow, this is really frustrating. Okay, so I will get this drawn out. Drag it across here. See if it makes sense with the market that we're in currently. So this wouldn't be a huge drop. It wouldn't be a huge drop from where we're looking at from the June lows. And let me just make sure that that's all good over here. And it does look like it's all good. Okay. So let's look at this. So if we break through these June lows, I would expect the next zone to be like 35.45 to 34.85. And then if we break through there, obviously maybe like this channel line, I do think that if we break through the June lows at some point, we'll make another touch of this channel line. Whether that's the last time we touch it or not, we'll have to see, but it is looking pretty bearish right now in the stock markets. There's really no argument that you can make to kind of push it back up, but it's a great time to be a long-term investor. The only time people don't like discounts is in the stock market, but that's when you make the most money, is when markets are lower. So just dollar cost averaging and sticking to the plan, honestly, is your best bet. Bitcoin, I mean, we've been talking about this range pretty much since I started the channel. It's just kind of sitting. It looks weaker now than it has the past couple of days, but we're sitting just above 19,000 now, and same story. The 17.5 to the 17.7 is our huge wall, and if we break through there, it opens up the 9 to the 12,000 for sure on Bitcoin. So maybe it'll come and hit this trend line at some point and then bounce back off. We'll just have to see, but for now, it's still in this huge range. So that's all I really have for you today. Obviously, we'll have that rate hike number tomorrow. We'll see how it affects the stock markets. If we reach the June lows, if we breach the June lows, maybe we even come back down eventually and hit this channel line. You'll have to stay tuned. Be sure to stay and stick around for the other videos that we will release this week following the close of the market. And if you haven't watched this weekend's video, be sure to do that. It was a really good one, and I'll be sure to make another one this weekend to top it. So until then, thank you for listening.